Welcome back. Well, as promised, let's get straight to our first corporate on the show. Well, it was a mixed quarter coming in for Cyient. Margins expanded, but revenue growth was a little bit weakish, and revenue wins as well did decline. Mr. Krishna Bodanapu, the Executive Vice Chairman and Managing Director of the company, joins us on the show. Hi, good morning, Mr. Bodanapu. Well, the revenue growth has been a little bit weaker than expected. It's down closer on 3.5% on a sequential basis. Has the macro worsened? Because your deal wins as well are down by closer around 12% on a quarter-to-quarter basis. And despite a bit of a softish first quarter, you're maintaining your growth of around 15 to 20%. So what are you baking in for the remainder of this year in terms of growth?
Thank you very much for having me on the call, and good morning. If you look at the number on revenue growth, essentially there's two elements to our business, as you may know. One is the manufacturing, which is Cyient DLM, where we announced results on Friday last week. And of course, the engineering business, which is Cyient. Cyient DLM has had a seasonally weak quarter. That was expected. That was down about 20% quarter on quarter, but that was also up about 30% year on year. It's just a weak quarter for Cyient DLM, and therefore that was expected, and that's what happened again for the first half, as we spoke about last week after we announced that results. We expect a strong half and a strong year there. The seasonality is something that we expected. On the engineering business, it was essentially flat, or there was a marginal growth that we showed this quarter. And we expect that for the rest of the year, on the engineering business, growth will be 15 to 20%, and that was expected with what was going to happen in Q1. We expected that we'll have a flattish quarter in Q1, and we see some good growth coming from Q2 onwards. So on the engineering business, we maintain the 15 to 20% guidance that we have on revenue. It's just that Q1 was going to be a little bit flat, and that's how it played out. But the reported number, the highlighted number, is really because of the manufacturing business. And again, on the manufacturing business, it'll be a great year. We're quite confident on that. So it's just the first quarter, and again, first quarter year on year grew 30% there. So you have to look at it as these two pieces. And since we have to consolidate, in the consolidation, the number perhaps shows up as it does, and it's not really a good reflection of what's happening in the engineering business.
Well, so which is why Mr. Bodanapu wanted some more color on the engineering side of the business and what really clients are saying now. Because I think for the first quarter at least, even deal wins were down. But like you explained, you're still retaining your full year guidance. The margin improvement that you spoke of, I think the earlier guidance was 100 to 200 basis points. Now you're saying 150 to 200 basis points. So that seems to be more pinpointed, more focused as well towards improving margins. What's driving this, and what makes you confident that you can deliver on the top line guidance as well, despite the slightly sluggish start to the year?
So on margin, I want to say we're saying 150 to 250. So it's not just on the lower end, on the upper end also we're upping it. So we still see some opportunities for growth. Obviously, we're working on them, and we'll commit on them through the course of the year. So it's 150 to 250. So we're quite confident on the margin front. Things will improve, and there's still further headroom for growth on a full year basis. In terms of deal wins, again, it is a seasonal issue in our business, because the first quarter of the year for our clients, which is essentially Q1 or Q4, tends to be a very strong quarter. And therefore, again, if you look at year on year, we've had a good growth in deal wins also. So taking all this into account and just looking at where our customers are and what they're telling us, we're confident about the growth numbers that we're talking about. In general, we don't see a major issue in any of our businesses. The one area that we do see a bit of a push out of business is in the some elements of the communication sector. But again, within the portfolio, I think we have other areas of growth that are matching up. I also want to point out that the aerospace sector looks like there will be a fairly substantial cycle, a super cycle, so to speak, coming up in the next few quarters, and that positions us well given our strength in the aerospace business. So, while there is a bit of weakness in communications, I think the rest of it more than makes up for that weakness.
Upcoming super cycle in the aerospace sort of business. So that's encouraging to hear. The other one, apart from communications, which you already alluded to, is semiconductor and high tech as a business unit which actually saw a decline. Could you talk us through that one briefly?
Again, I think the semiconductor business is also a bit cyclical, so we're just seeing that in this quarter. We're quite confident about that business also going forward. The high-tech business is an area where we've had some challenges and will continue to have those. It is about 6% of our revenue, so it's the relative impact is small. But I think I'll say we're working on those challenges. But again, the focus is on some of the larger sectors where we see some strong growth, and our customers seem to be continuing to spend like they were through the last year.
By the way, I heard that correctly, right? A super cycle in the aviation business?
We're seeing that happening. It hasn't started yet, but it will start. We believe in the next 12 months or so.
Okay.
All right. Got that, Mr. Bodanapu. Thanks very much for joining in. Prashant, given the way a lot of the Indian airlines are going ahead and making these large purchase orders, I guess we have a role to play in the super cycle as well, perhaps.